Hey all, welcome to ShareTreck. This is Raj here. Friends, today I'm going to talk about ASML. ASML's price has fallen sharply and it seems like a great deal, but is it really a good deal? Is it the right time to buy ASML? What are its prospects and why did it fall? Those are the kind of things that I'm going to talk about in today's video. So if you're interested, keep watching. Let's get started. Welcome back. Friends, let us start off first with the current financial performance of ASML. ASML's Q3 2024 results show net sales of 7.5 billion with a gross margin of 50.8%, and Q4 projections range between euro 8.8 and 9.2 billion. However, this company has revised its 2025 revenue forecast to 31.8 billion, below the prior guidance of 32.5 billion, with a projected gross margin of 52% earnings per share for 2025, which is expected to be around 23.8 euros. Now, after this happened, the stock dropped significantly. There have been some analyst downgrades in response to this more conservative forecast. The most notable is Bernstein and Society General Group, which has reduced ASML's price target from 980 euros to 750 euros, but maintained an outperform rating. Other firms such as Citi, Deutsche Bank, and Cantor Fitzgerald have also cut their price targets but remain positive on the stock's long-term potential. Then the question becomes, what does a retail investor do? And I'm going to look at it from my perspective as a retail investor and share my thoughts aloud so that you can see how my mind is working on this problem. And then with that information, you can decide what you want to do. So first of all, we are looking at lower EUV lithography volumes. One of the main reasons for the lowered forecast is the underperformance of extreme ultraviolet or EUV lithography, a core technology for ASML. EUV volumes have fallen short of expectations, which is impacting ASML's top line growth for 2025. And friends, if you have been following ASML, you would know that they have a high precision chip making machinery, and they have been improving the ability to etch thinner and thinner lines on silicon and create much more complex chips. It has been a pride of the company that they have this unique technology, and everyone buys from ASML. So the current weakness might seem quite tempting. And then the question becomes, if there is such a strong technical advantage for ASML, then how come the share has dropped so much? So one of the aspects is the reduced projections going forward. And the reason why those projections are reduced is because ASML expects that China will account for about 20% of its 2025 revenues. However, this projection is cautious considering the potential risks of geopolitical tensions and further restrictions on technology exports to China. There is a provision that has to be renewed by the government in order to allow ASML to continue supplying this technology and servicing their machines which they already sold to China, and that is coming up soon. And the question is whether the Dutch government will renew it or not. If they do not renew it, then the drop that we have seen in the share price will exceed a little more and then consolidate and start picking up as ASML gets acclimatized to a new geography which excludes China. But if the Dutch government allows this to go ahead, then the extent of the projection that was impacted due to their inability to service existing equipment in China is going to be restored. So that's the way I'm looking at it. If you ask me what is exactly the quantity of such business, I really do not know. I'm a retail investor. I don't have access to that kind of information. I'm still searching. If I find it, I'll share that with you. There is, in my opinion, on the upside, there is a strong demand for wafer fabrication equipment. The short form for that is WFE, particularly from China. Though there are concerns about over-reliance on lithography in this market, this demand could offer some support for ASML's future revenue streams. And ASML's stock has seen significant devaluation recently, trading at a multiple that is one standard deviation below its historical average and at a discount to the semiconductor index SOX. So Bernstein SocGen Group believes this valuation is excessive considering ASML's strong market position and structural importance in the semiconductor industry. As a retail investor, I always look at the long term because I'm not into speculation. I have a very small portion of my portfolio for speculation, and I reserve that for FNGU and FNGD. And right now, I don't have any money, but I'm going to look at this from a long-term perspective. Looking ahead, analysts are expecting a recovery for ASML by 2026, driven by increasing demand for deep ultraviolet and extreme ultraviolet lithography, particularly in non-China market. As I mentioned, the market, if the Chinese market is blocked, then ASML will grow in non-Chinese markets because people who source chips from China will start sourcing the chips elsewhere, and therefore the manufacturing facilities will go elsewhere, and that's how the market will be recaptured. Some analysts have already revised their earnings estimate upwards, highlighting optimism about ASML's long-term prospects. So if you're in it for the long term, and if you're not putting money into ASML that you might need maybe 6 months down the line, then I think you are pretty good. It's definitely going to improve. That's my personal opinion, not financial advice, but that's the way I'm looking at it as a retail investor. And I think ASML's strong financial foundation is reflected in its current market capitalization of $286 billion and a price to earning ratio of 38.08. The company's solid gross profit margin of 51.15% over the past 12 months underscores its ability to maintain profitability in a challenging market. And that's a good aspect in companies. That's what I call as companies which have got command leadership over the market price and over the customer. And ASML is a critical player in the semiconductor equipment industry, which is essential for manufacturing advanced chips used in everything from smartphones to AI. The current market downturn may be cyclical, but long-term structural demand for more advanced chip technology supports ASML's growth potential. And ASML remains one of the leading players in the semiconductor equipment industry, particularly known for its dominance in lithography machines, which are crucial for chip manufacturing. Despite short-term headwinds, its critical role in the supply chain for advanced semiconductors gives it a long-term growth potential, in my opinion. And China's significance to ASML is notable, but the risks of geopolitical tension and export restrictions loom large, not only for ASML, but any company that depends on either China as its source for parts or as a destination for its goods. And the conservative forecast of 20% revenue from China for ASML reflects the uncertainty around the potential US-China tech restrictions, and ASML's dependence on China is a key risk factor to monitor. So if you decided to invest in ASML, you have to constantly monitor what's happening in the geopolitical arena between US and China. And also the Dutch government and China. The shortfall in EUV lithography volumes is concerning, as EUV technology is essential for producing cutting-edge chips. However, the semiconductor cycle has historically been volatile, and demand for advanced lithography could see a rebound as more companies, particularly in AI and data processing, need smaller, faster chips. And with ASML trading at a discount to the semiconductor index, some analysts see the current valuation as an attractive entry point for long-term investors, especially given its dominant market position and potential for recovery in 2026. So I would like to conclude by putting together some overall thoughts. While ASML faces some near-term challenges like lower EUV volumes, risks from China, and a tempered revenue forecast, its structural role in the semiconductor industry combined with its market leadership suggests long-term potential upside. That's what is my takeaway from everything that I have read so far. And I think that despite the short-term challenges such as lower EUV volumes and potential risk from China, ASML's dominant position in the semiconductor industry, its financial strength, and the anticipated recovery by 2026 makes it an attractive option for long-term investors. When I say long-term investor, just think that if you put money into ASML right now, you don't want to pick it up until middle or end of 2026. If you can do that, then I think that ASML is a good option for good returns. Again, this is my personal opinion and not financial advice, so friends, be very careful. Here's an article that I saw which talks about the current situation. So the way we have to understand the current situation for ASML with regard to China is that ASML has received clarifications from the Dutch government that in order to provide spare parts and software updates for computer chip making equipment to China, it will have to get a license. The Dutch government added 2 additional tools to its list of export restriction material or security concerns, and the decision on the restrictions was taken following a coordinated policy with the United States. And the government released on Tuesday a clarification about what falls under this new round of restrictions. And Dutch company ASML is Europe's largest technology firm, and its exports are closely monitored for security reasons. The company is the leading firm of lithography tools used by chip makers for circuitry of chips. Now, the Chinese government has already complained. It says here China complained against the decision and appealed on Dutch-Chinese economical cooperation to break the ban. The Dutch government started to add restriction on ASML's export already in 2023, in part due to concerns over China's support for Russia in the Ukraine war. ASML had already told in 2023 to Chinese customers to not expect import license for its most advanced DUV tools after 2024. And recently, during an event in New York, ASML CEO Christopher Fouquet said that he doesn't expect the restrictions against China to go away in the foreseeable future, seeing the issue as bipartisan and likely not affected by the outcome of the US presidential election in November. Fouquet also believes that Dutch government will not align with the US in case of more restrictions. So over and above the existing restriction, if there are more restrictions, then I think the Dutch government may not go along. That's what Fouquet believes. And I think given its current discounted valuation compared to broader semiconductor index, I think it makes a really good purchase. Now, I'm still trying to follow and find out more information about the renewal of permission for ASML to continue servicing the equipment that it has sold to China and any other restrictions that have to be renewed by the Dutch government. Once I have more information on that, I'll make another video, or at least mention that in my morning videos when I do the pre-market update. I'll let you know about it, because that's again going to be critical to see a bounce back. In case the renewal takes place, there'll be a jump in ASML value. In case the renewal doesn't take place, there'll be a consolidation, maybe a little more drop, and then over a period of time it will start picking up, because the immediate effect of it will not be felt in the very short term, but it will be felt in the long term, because some methods can be adopted by those companies in China to continue their chip manufacturing, but after a point of time the machines will need servicing, and since ASML will not be allowed to service it, either third party has to have the capacity to go and do it, and they must be not in the sanction regime. Basically that means Chinese companies will have to step in and help that. And if those companies do not exist or not able to help fix those equipment, then those Chinese companies using those equipments will not be able to service their international clientele, and those international clientele will start looking for those chips from elsewhere, and the capacity will move to other countries, and ASML will resume supporting those countries for the increased volume, and ASML will start going up, and that could take maybe 6 to 12 months. So those are the kind of numbers that I'm looking at, but overall long-term ASML is good in my personal opinion. So friends, I would like you to let me know if you have ASML in your portfolio, and please put in the comment section what you think about my analysis. Was it helpful in any of your thoughts? Do you have any ideas that I have not shared here? Please put that in the comment section so that the other subscribers and viewers of our channel can also benefit from it, and I'll also benefit from it. Thanks and have a great day. Bye.